Hello traders, welcome back to the channel. This is Vishal and you're watching the weekly sectoral analysis. Now in the front of you, you have the daily and the weekly time frame charts. In terms of trend, we can see that the trend is up in the daily and in the weekly time frame charts. But one thing which you should be seeing very carefully is that things are happening way too fast. Like especially since early March, what you can see is price is more of in a range. Over here, you saw that there was some sort of decent momentum on the upside, but since early March, things have changed. Markets are coming down and going up way too fast. Like in just a couple of weeks or 3 weeks, market collapses. Once again, it goes up, down and up. So in terms of trend, like yes, in terms of trend, we are up, but it's not a prolonged or sustained trend. Because if you want to make money in the markets, you need some sort of prolonged trend over here like this. But yeah, if you have a diversified list of stocks, then maybe things will get a little bit easy. But again, yes, we should not ignore that things are happening way too fast and you should be a little bit careful when you are choosing your trades. Apart from this, I think it's since long when the trend and the momentum is completely, I should say, not connected with each other. I'll just convert this chart into a line chart and you can clearly see that there is a sign of negative divergence in the weekly Nifty future chart. You can see that we have a higher high over here. I'll just try to zoom in it a little bit. You can see over here we have a higher high, but in the RSI we have a lower high. And after that, in price, we have not been able to make a higher high in terms of weekly close so far. So basically, we are having signs of, diminishing momentum, but still the trend is up. So far, it's okay. Like we should stay mildly bullish, cautiously bullish. Why cautiously bullish? Because price yet has not been able to break any important support and it's not started to trend on the downside. The trend is still up. And in the short term, I should say that in Nifty futures, 22,354 to 22,465, this entire band will act as a short-term support. Now, in case if we break some important level or things change, something like that, then it's a different thing. But yes, we should stay cautiously bullish and you should also concentrate to understand which sector is moving. And within that sector, you will have to do micro mining and understand, say, for example, if you have a list of, say, 6 stocks in a particular sector, you'll have to choose one or maybe max two. This is not a time of plenty where you will get a lot of trades which are going to help you make some easy money in the market. Let's have a look at the Bank Nifty. Now, Bank Nifty is outperforming Nifty. I should say that, yes, there is a sign of selling on the upside. You can see the same thing over here, but it's fine. In comparison to the Nifty, Bank Nifty is still better. And the trend is up in the weekly and in the daily time frame charts. And if you talk about immediate supports, then 48,647 to 48,253 or 250 in terms of round figure will act as a short-term support in case if Bank Nifty decides to dip a little bit more further in the upcoming week. PSU Banks. Now, this is the first time, I should say, after a pretty long time where PSU Banks have displayed the sign of wanning momentum. You can see the price has made higher high over here and the RSI has made lower high in the weekly time frame chart. Now, in the daily time frame chart, things are looking fine, nothing wrong in the PSU banking sector. Only thing is, I think, little bit of consolidation or a sideways movement, catching up of breadth in the market might happen in the PSU banking pack. All right. Now, private banking pack, despite this collapse of Kotak Mahindra Bank, I should say it's really respectable to see that private banking pack has still held it up. And yes, in the last 3 weeks, we have seen clear signs of indecision. The first sign was possibly in the 15th April week where things were visible that buying pressure is coming on the downside. Markets tried to go higher. Then we had a long-legged sort of doji, again a sign of indecision. And then in the third week, what we can see is a lot of selling coming on the upside. So basically, despite seeing this pretty large hammer, this is not a small hammer, this is a very large hammer. Despite this large hammer, again, in the next couple of weeks, we have some sell-off coming up from the upside. So this is a clear sign of indecision in the short term. And I guess a lot will depend on HDFC Bank, where it's still consolidating in the daily time frame charts. I had shared my positive view regarding this stock, I think, in last couple of weeks. So far, I think the bank is just holding up. It has not tried and it has not even shown its strength on the upside, because the Kotak Bank is going down. ICICI Bank is still holding up pretty nicely. If HDFC Bank starts performing on the upside, then I think it will be able to support the bank Nifty as well as Nifty, because it's a very biggie. Energy Pack. Energy Pack, I think I have continued to share my clear views that the momentum is very much lacking. You can see the prices are trending higher, but if you just have a closer look, then you will not see any good reasonable number of positive candles in this particular short-term uptrend. Even in the weekly time frame charts, things are even much more clear. So I guess the consolidation, which is actually very necessary in the energy pack, might continue even for the next week. Metal pack. Now metal pack, as I have been sharing since mid of March, that metal pack is one sector which could outperform, and it has outperformed. So according to my analysis, it's time to book partial profits. Whoever has, park their money in the metal pack as a positional trader or maybe even as a swing trader, it is certainly time to book some partial profits, because in a time when markets are so volatile, going up and down within a period of 2 to 3 weeks, if you're getting some money rather than staying for the long haul, it's important to book at least 50% of your positions. Auto pack. Now, auto pack, I should say that despite these readings where it's very clearly visible that the trend and the momentum are in total disconnect, you can see rising prices, higher highs, and you can see a series of lower highs in the RSI. Despite these signs in the weekly time frame chart, I guess the trend is so strong in the auto pack that this particular sector is not worried about wanning momentum or anything. The price is continuously going up. There was one stock which recently performed pretty nicely, which is Maruti. And now it seems that the result has also come up possibly on 26th of April. In the weekly time frame charts, we can see a sign of wanning momentum as it's showing a sign of negative divergence. So anyone who has been holding Maruti, I think they should trail their stop losses pretty tightly, even if you're a positional trader or maybe even as a swing trader. So just be a little bit careful in this particular sector, in this particular stock, sorry. So if it corrects and if your stop losses are hit, it would make sense to possibly book profits. Finance pack. Now in this sector, again, this looks a little bit like a private banking pack, slightly similar, not exactly, but I should say that it is again displaying signs of, first the 15th April week where a lot of bottoming out happened in the daily time frame chart, and then we saw a high wave candle and then again a green candle which is slightly bigger in size, but it has a very big wick on the upside. So we can clearly see we have a 127.20% Fibonacci extension over here, which is providing resistance. I guess as of now, it is not a sign of top or something. If it consolidates, if the finance pack consolidates and doesn't break any lower important support levels, then maybe after the consolidation, prices might try to make a new high, especially about this particular week. Consumer pack. Consumer pack, again, I should say that is once again trying to make signs of wanning momentum. Prices are making higher high, and RSI is making lower high. It's clearly a sign that the trend and the price are in absolute disconnect, but the trend still continues to go higher, and it is not worried that what's going to happen in the markets. Now, within this sector, there is one stock which I would like to share with all of you. Currently, this stock is not doing anything. It's trying to go down. Okay, it's trying to come down, then it tried to go up. Again, it's trying to come down. Now, this is a particular level where you will see the stock has seen support multiple times, almost 3 times. This is the first time, this is the second time, and this is the third time. Now, whether this will break or whether this will hold, we have absolutely no idea. But if this low holds on, and if the stock tries to make a U-turn and gives a breakout in the daily time frame charts with a pretty big positive big green candle, then I think traders should keep a watch on the stock with a view of 1 to 3 or 1 to 4 months. FMCG pack. Now, this particular sector, I guess it's trying really, really hard, especially from, I should say, the mid of March. If you just have a look at this trend, it went up way too fast. It consolidated and then it collapsed. When it collapsed, it tried to make a new low, but on closing basis, if you can clearly see, it was not able to close below that low. It was not able to close below this low. And again, we have a short-term momentum on the upside. So it's trying its very best to get out of this consolidation, to get out of this mess. Now, how it works out, only time will tell. Now, my eyes are on this stock, ITC. It has displayed some strength after a pretty long time. We had this strong correction, the rebound, again a fall, again it went up, again it came down, again it's trying to go higher. So if this stock continues to go higher with decent momentum, then I think the chart of the FMCG pack might change and ITC might be able to help Nifty to stay slightly higher. Infrapack. Now, Infrapack, I guess, if you have a look at the weekly and in comparison to that, the daily time frame chart, you will see some differences. The difference is that the RSI in the weekly time frame chart is well above 70. It's around 78, 79, and it has displayed multiple times wanning momentum with negative divergence. But this particular sector has continued to go higher. I guess as a trader, I would be very careful and I would avoid taking new positional trades in this sector. But if this sector falls, if the stocks in this sector, collapses on the downside, and then if it tries to go for a short-term revival, then maybe yes, I would be interested. IT pack. Now, IT pack, if you just have a look at the daily time frame charts, you will clearly see that things are not fine, and this entire sector is very, very weak. There was a small sign that maybe we could have a pullback, but it did not happen, and the sector did try to make a new low. But when you do multiple time frame analysis, things change. Now, if you have a look at the weekly time frame charts, again, you will say, yes, and the RSI is going down. Price is also below both of the dual moving averages. It has also closed below this particular high, which is the previous high, and it has also closed below the 61.80% Fibonacci extension. I completely agree to that. But at times, we need to deep dive even more in the monthly time frame charts and possibly check little bit more properly that we are near a 50% retracement of the monthly time frame chart. Now, this is very, very interesting. I'm not saying, or I'm not sharing an idea that, okay, the correction is over and we might try to go higher from here. Only thing is we need to acknowledge that IT sector is near important supports in the weekly time frame charts and especially in the monthly time frame charts. What price action occurs in the next few days, only then we will be able to conclude that is something interesting happening in the IT pack, or I guess the correction will continue. So time will tell, I guess. Pharma pack. Pharma pack, if you have a look in the monthly time frame charts, things are very clear. No momentum whatsoever in the last couple of months. Even this month, it has been lackluster. You can see the RSI, which is extremely sideways. In the weekly time frame charts, a little bit of momentum is visible in the last to last week, I should say. And in the daily time frame chart, it is just consolidating. If you remember, I had shared my positive view only on one stock, which is Pharma, with a viewpoint of a person who's a positional trader and even a swing trader. I think as a swing trader, the view has already worked pretty nicely. As a positional trader, things are still moving on the upside, so things are okay. But there are a couple of stocks where possibly you should keep a watch on. Maybe in the next few days, you may see something interesting, especially Dr. Reddy. Yet so far, nothing interesting is visible, but you should keep a watch. And second one is Cipla. Cipla, I believe it will take some time. It may or may not happen very soon, but just be careful that we have a result day on 10th May. PSE sector, I guess I don't need to say much. I think my view remains the same. People who participated over here as a swing trader might have some good amount of money and times to trail their stop losses pretty tightly. And if your stop losses get hit, you come out. If they don't get hit, keep riding the trend. Realty pack, I should say that clear signs that we have case of wanning momentum, but still the reality pack is not ready to give up, because if you just have a look at stocks like overall realty, if you just have a look, especially in the early time frame charts, you see the way the stock has performed in the extreme short term. So yes, the realty pack is trying very, very hard to stay higher, but we should also understand that there are signs of wanning momentum in the reality pack. So as a trader, you should be careful. Even in the daily time frame charts, you will see signs of wanning momentum. So I guess this is a time, even as a short-term trader, if you have made money in the realty pack, possibly try to book partial profits and stay vigilant. And finally, the mid cap. Mid cap, pretty nice up move for short-term momentum traders, swing traders, I should say. This is a very decent momentum on the upside. But again, if you have a look at the weekly time frame charts, you will have multiple cases where prices have made a higher high, RSI is making a lower high. I don't know when this will happen, when this will crash or whatever, but we should surely acknowledge one thing, that the momentum is absent. And generally when the momentum is absent, I would try and trade in a way that I'm able to enter and exit the market as fast as possible, which means I would like to be more of a swing trader right now, or a short-term momentum trader, rather than a positional trader, until and unless I see something really, really interesting. All right. So I guess this video has helped you to understand how markets might move in the next few days. If you find this video valuable, try to subscribe to the channel. It will help the channel, and also share this video with your fellow traders. Trade less, trade wisely. Thank you.